All right, diving into Aries 10K reports today. Talk about dense reading material. It's a lot like trying to service a billion-dollar spaceship engine, but instead of a wrench, all you've got is the tech manual.
And a pretty hefty one at that. But hey, that's why we're here, to break down the complexities, unpack the jargon, and understand what Aries is all about, how they operate, and what makes them profitable.
Exactly. So for those unfamiliar, what does Aries actually do?
Simplest terms, they're an alternative investment manager. But we're talking way beyond dabbling. They're heavily involved in credit strategies, private equity, real estate, you name it, even infrastructure these days. Almost like,
A financial octopus with tentacles everywhere.
That's a great analogy. And we're talking a big octopus. Just to give you a sense of scale, as of 2023, they had over $370.6 billion, that's billion with a B, in assets under management.
Wow, $370.6 billion. It's hard to even imagine that much money in one place. So how do they actually turn all that into profit? Let's start with management fees.
Imagine Aries as a expert ship captain, right? Investors pay them a management fee to navigate the financial seas and steer their investments in the right direction. It's typically calculated as a percentage of the assets they manage, creating a consistent income stream for Aries.
So it's like a kind of a subscription fee for their expertise?
Precisely. Now, carried interest, that's where things get interesting.
Okay.
That's like finding buried treasure on one of those voyages.
Ooh, okay, buried treasure. I'm intrigued.
Basically, they get a share of the profits from their investments, but there's a catch. This carried interest only kicks in after a certain level of return for their investors is reached, known as the preferred return. It incentivizes them to aim for those big wins.
Right, a performance-based bonus of sorts. But I did notice the 10Ks mention clawbacks. That doesn't sound quite as exciting as buried treasure.
True. It's about balance. Clawback provisions basically mean that if a fund's performance drops after Aries has already received carried interest, they might have to return a portion of it. It protects investors and keeps Aries' interests aligned with their own.
So it's a safety net. Ensures everyone benefits from the voyage, not just the captain. Speaking of which, the 10Ks don't shy away from the risks involved in Aries' investment strategies, do they?
Absolutely. Investing, especially in the areas Aries focuses on, inherently comes with a degree of uncertainty. Their business model is especially susceptible to fluctuations in interest rates, for example.
Yeah, interest rates. Talk about double-edged sword. How do those impact a firm like Aries?
Well, think of it this way. Aries, they often use borrowed money to leverage their investments, right? When interest rates go up, their cost of borrowing increases, which can potentially eat into their profit margins. It's like trying to sail through a narrow strait with the tide working against you.
Makes sense. And speaking of rough waters, economic downturns, the 10Ks definitely highlight that as a risk factor. What happens to Aries and their investors when the economy takes a hit?
It's a critical point. During a downturn, the value of their investments, it can fluctuate, and not always in a good way. Companies they've backed might struggle, which of course impacts returns. It's like a rising tide that lifts all boats, suddenly becomes an ebb tide, and some boats are left high and dry.
So we've got interest rate fluctuations, economic downturns.
Yeah.
Feels like there's always something that could rock the boat for a firm like Aries. What about competition?
Ah, yes, competition. Aries isn't sailing in a vacuum. There are other major players in the private equity world, all vying for the same investment opportunities.
A high-stakes game with some serious contenders. What does Aries see as its strengths in such a competitive environment? The 10Ks mentioned something about a multi-asset approach.
Exactly. Aries emphasizes its diversified approach. They're not just focused on one type of investment. They have expertise across various asset classes. It's like having a fleet of ships instead of just one. They can weather different economic storms.
So spreading their risk. And what about market intelligence? They highlight that in the 10Ks as well. What does that actually mean in this context?
Essentially, it comes down to Aries' research capabilities, their ability to identify promising investment opportunities, and perhaps more importantly, to identify them early. They're constantly scanning the horizon, looking for those potentially profitable routes.
Like they have a crow's nest view of the entire financial landscape. Now, switching gears slightly, one thing that struck me in these 10Ks was how Aries professionals are compensated. It's not just about salary, it's closely tied to their performance, wouldn't you say?
Absolutely. It goes back to the concept of carried interest. Their compensation is directly linked to the success of their investments, which creates a strong incentive to steer the ship towards those profitable outcomes.
So the better they perform, the greater their potential reward. But that also raises questions about potential conflicts of interest, something the 10Ks also touch on.
You're right, it's a balancing act. While performance-based compensation drives success, ensuring that the incentives align with the best interests of the investors is crucial.
It's a tightrope walk, for sure. We've covered a lot of ground here. We've talked about Ares operations, how they make money, the risks involved, and even how they incentivize their team. But for our listener, why does all of this matter? What's the takeaway?
Because when you understand Ares, even on this level, it gives you a glimpse into the world of private equity, how it works, its impact, and how it influences the broader financial landscape.
It's about seeing the bigger picture, right?
Yeah.
Understanding how the moves of firms like Ares create ripples that go way beyond Wall Street. And speaking of moves, one thing that really jumped out at me from these 10Ks is Ares' focus on growth through acquisitions. They seem to be on this constant mission to expand.
And that right there is something for listeners to ponder. As Ares continues acquiring other companies, what does that mean for their future? What direction are they headed? Are they exploring new waters, or are they reinforcing their existing positions? It's an intriguing question.
It's like they're always on the lookout for new, uncharted territory, those hidden gems. Which leads us to our final thought for the listener. Could Ares' future acquisitions be a clue, a sort of roadmap even, to where they see the financial world heading?
It's a question worth considering, and it underlines how important it is to stay informed, to pay attention to the moves these major players are making.
Absolutely. Knowledge is power, especially in the intricate world of finance. Today, we've really unpacked quite a bit. Management fees, carried interest, risk factors, incentive structures, even a bit about their growth strategy. Hopefully, you now have a clearer picture of ART and this whole world of private equity.
It's been a pleasure really diving into these 10Ks with you. Dense as they are, there's a lot of fascinating stuff in there.
And remember, this is really just the tip of the iceberg. There's a whole ocean of financial knowledge out there waiting to be explored.
So stay curious, keep asking questions, and join us next time for another deep dive.